It's, I think, a very exciting time for Africa. Our fund started in 2008, and as the chairperson said, we focused in on domestic, predominantly South African residential real estate. And our focus is particularly on low and moderate income housing, which is an asset class, I think, that is not something that is particularly sexy and, a place that a lot of investment has poured into historically. We have fiduciary investors in our fund. So while the asset class that we look at, I think, has a huge social development impact, our real focus is on returns. And so we really are very interested in maximizing our returns for our investors in the asset class. We operate in the side of the residential housing, which is in the group of homeowners and renters that are too rich to get subsidies from government, but too poor to have been historically taken care of by the private sector. And so this is a group that in South Africa are often referred to as the missing middle or gap housing. And it's really offered us an enormous business opportunity and the opportunity to give really terrific returns to our investors. Our first fund, which is about 80% invested, we have about 25,000 housing units we've financed nationwide in South Africa. The fund was targeting a mid-20s return before taxes. And despite the crisis, we think we're going to do very close to this return for the fund. It's very interesting for us. You mentioned the housing crisis and the mortgage crisis in the rest of the world. Well, our fund has been impacted by this, not because we're in the mortgage provision sector, but because if they're not the mortgages available for people to buy houses, the ability for people to buy the houses that we're financing is significantly restricted. So one of the things that we did fairly early on in the fund is we shifted emphasis away from selling homes to renting homes. So we really have now a more balanced view between building houses for sale and building houses for rental. And whereas we'd originally envisaged ourselves doing about 30% rental and 70% home ownership, it's more about 50-50, maybe slightly skewing towards rental. Now, what this gives the fund the opportunity to do is to produce the housing in a time when there's very little competition because there's great scarcity of capital, and to rent out in a very, very strong rental market with the opportunity to either sell at an institution level and to keep the stock as rental, but also the opportunity to sell for home ownership at a later time when the market is more buoyant. So the crisis has, in fact, in many senses, been very helpful to the fund. We were the first private equity fund focusing in on this asset class. We're the first entity in South Africa offering equity into this market on any sort of ongoing basis. So, getting developers and other market participants accustomed to who we were and what we were doing has been very much facilitated by the fact that there is a capital crunch, and so money is scarcer. And if you have a good pot of dry money, then and your powder is dry, then you've got the opportunity to really approach these markets. The fund is about $250 million in size. Fund one we had the mandate to invest a little outside of South Africa. We have not found an investment that we have liked to date outside of South Africa, but we also haven't been really proactive. We've been looking to really hone the procedures internally before we move further north. Our next fund, which we're hoping to launch next year, is going to be very much more focused north of the border. It's going to continue to be focused in South Africa, a market we know very well, but also partnering with a good number of players. We've developed relationships with north of the border and really looking forward to taking this model further north. I have a shot at that, since 60% of our investors in an African fund are not African based. And for all of them, it was their first investment in Africa. I think that, you know, one of the very big issues, and we spoke about this a little bit yesterday in a different forum with African Investor, is the ability to move money in and out of a country quite easily. And I think that's absolutely critical. I think one of the other things is that the investment really has to be in local currency. And if that local currency is not in some way stable, that's really very problematic, because getting any kind of hedge is really just too expensive and makes it quite impossible. And then I think it's really very niche by niche. I think one of the things that has given foreign investors a huge amount of comfort with our fund is the amount of local market expertise and the soundness of the business plan and the nicheness of the product and the focus of our entity. Because I think one of the things that's really critically important, and I look sometimes at my colleagues in private equity that work across all asset classes and really kind of wonder about, you know, how they do this and huge awe of it. But, you know, we work very specifically in a very, very small niche, and it's still very complex. So I think from the perspective of our investors, the fact that we really understand real estate, really specifically understand residential real estate, and are very focused on a small sector of that, gives them huge comfort. The other side of that is the problem that, you know, Colin and Tom, I think, raised, is that the deal sizes are very small. So when you get even more niche, then you have the deal size issue. But I think if that starts to answer some of that, and I'm sure other folks here would have other comments to add to that.
Doing business in Africa. You can't afford to be without Africa Investor.